fairly strong euro in the last few weeks, with the euro appreciating against the dollar to 133, 134 now, from the 128 level. Again, this has been due to signs of better economic growth prospects in Europe from albeit a low level. Similarly, for sterling, the sterling appreciation can be attributed to the much better GDP figures that we've had, which were double the expected figure of 0.3%, came in at 0.6. We've had much better PMI services figures out last week, which has given a much better kind of growth prospects for the UK, and there's been a flight out of US dollars into the euro and into sterling. When trading, liquidity is very important, and also spreads. So the more liquid a currency is, the FX pair, so like if you have euro dollar or dollar yen cable, those are three of the more popular trades, where spreads are much tighter. They can be as low as 1 pip, and it can be easy to get in and out of those currencies because of the massive volumes involved. Whereas if you were to choose exotic pairs, something that's being talked about quite a bit at the moment is the Indian rupee. Because of the much lower volumes and the wider spreads, then it can be difficult to get in and out at the price you wish to. People generally, when they're trading, they use up far too much leverage, and because FX is a very highly geared product, sometimes using up too much leverage can just kill the trade in a matter of minutes. So it's of paramount importance not to use up all available leverage when trading, and especially when important data comes out like non-farm payrolls or GDP figures. It's important to have some kind of buffer whereby if the market does go against you, albeit for a short period of time, you have that kind of protection not to get liquidated. I think it's important when one trades to take profits fairly soon after a position's been opened, especially in the FX markets, where there can be swings of 100 points in literally minutes, especially around when economic data comes out. And if you are in a position whereby to take some profits a few times a day rather than just waiting for one big profit, it's good to take little chunks so that you're reducing your risk and you're reducing the size of your trade and you're banking profits. The number one rule is to protect yourself. You could have one really good trade, thinking you've got a really good trade, but you could fall asleep, and the next morning you could wake up and that position could be against you in a really bad way. Instead of, if you had taken some of your profits before the turnaround, before you've gone to bed and the market's gone against you, it's always better to take some money off the table and bank some of those profits. We've got the German elections in September, so just in the next few weeks, and because Germany is the powerhouse of Europe, the markets are going to look very closely at the outcome of the election. The euro, as I've already said, has been extremely strong in recent weeks, and from a fundamental point of view is looking overstretched. A lot of good news is already factored into the appreciation of the euro, and if there are any concerns about the elections, and there will be some nervousness ahead of the elections in the coming weeks, that could have a fairly adverse effect on the euro, and we could see the euro falling fairly sharply from current levels. Just from a purchasing power point of view, the euro is extremely overvalued against the US dollar. I on fundamental grounds, no way should it be at 134 currently. But there's always an overshoot in one direction or the other, and we seem to have an overshoot in the buy side of the euro at the moment.